Good evening, ladies and gentlemen. Assalamu alaikum from Dhaka, Bangladesh. This is Salim Hussain. I'm the Managing Director of BRACBANK Bangladesh, and I would like to welcome you to the Earning Disclosure Program for the third quarter of 2022. I have with me most of my senior management team, and I will introduce them to you as we go along. But let's move on. We intend to finish this today's discussion within 90 minutes. And shall we move on then? Next slide, please. The standard forward-looking statements. Let's look at our contents, and we start off with an economic outlook and a market update from Shaheen Iqbal, Deputy Managing Director and Treasurer and Head of Financial Institutions at BRACBANK. Shaheen, over to you.
Thank you, Salim bhai. Good evening to everyone. I think world is facing some economic challenges across the globe, and we are not outside that one as well. So we are seeing various challenges from various fronts, mainly from external segment that is coming from fuel price to commodity price, initially through inflation, and also it is creating pressure on the overall FX reserve as well. So in general, because of this higher price of commodities, we have seen higher depletion of overall reserve for the country, and the pressure continues as of now. But we expect to see some improvement going forward, say quarter one, quarter two. So in our view, like by quarter two, it should stabilize and normalize. So if we see that like this year, our export earning has grown by 7%, 7.01. Import is coming down, and remittance is also growing. So overall, like we are seeing some light at the end of the tunnel, and we are seeing some positive sign as well. And also agreement with IMF to have some financial support that is going to support as well for the economy. Next slide, please. So still now, Bangladesh economy throughout the pandemic fared very well, and projection this year and for the next year is also quite good considering the global scenario. We expect to see Bangladesh growing more than 6%. So I think this is quite commendable given the challenging scenario across the globe and in the domestic market as well. So I think this testaments to the solid fundamentals of the economy, and I think we would be able to maintain stable growth on bank side as well going forward. Next slide, please. On the overall position, like we expect to see like the negative pressure from trade gap and the current account deficit gradually coming down, and probably by the end of this financial year, like next June, the things should improve significantly from this level. And also like FX reserve gradually stabilize with the support from IMF and the above initiatives from the government as well. We are seeing good growth momentum from private sector credit. With this like higher inflation, liquidity challenges, we expect to see some curb in demand. So gradually the growth should normalize in the coming quarters, and we expect to see normalized growth next year as well. On the liquidity side, as I mentioned, like both local currency and foreign currency liquidity is tighter, and we expect to see foreign currency liquidity situation improves by June 2023. And local currency side, I think central bank would pursue a relatively tighter monetary policy to curb down inflation. That's my take for our economic outlook. Over to you, Salim bhai. Thank you.
Thanks, Shaheen. Let's now move into the SME business update, and we'll be listening to Tomal Syed Abdul Momen, our Deputy Managing Director and Head of SME. Tomal.
Thank you, Salim bhai. Good evening, everyone. Amidst these various economic challenges, our SME team have specific segments of our SME team have continued the growth momentum. Specifically, our small business, they have driven the business pretty well at the same momentum almost, which we have started from the Q1 of this year. We have brought in 75K new to bank customer, which is a 22% year-on-year growth. Our asset portfolio have also grown, mainly driven by the small business, which is we had a 28% year-on-year growth. But our deposit portfolio have also grown. We have grown 13%, the SME deposits year-on-year. But due to the recent challenges, there is a change in our CASA mix. It has gone down a bit, which has resulted in a growth in cost of deposit by 80 bips. And in terms of portfolio quality, we have our 30-day overdue portfolio quality has significantly improved. It has the percentage-wise year-on-year, it went down to by 1.3%. However, all COVID-related forbearance have been lifted, though we didn't have much portfolio there. But in our emerging corporate segment, we had some. So those, due to the removal of forbearance, there is a slight increase in the NPL percentage by 1.1%. The trade business volume have also grown by 27%, which has resulted in an 18% growth in our net commissions. And we have also actively participated in all the government stimulus packages, and we have disbursed year to date around 665 crore of taka from the stimulus package. And you know that there is a new stimulus packages have come in by the central bank, especially for the CMSME segment. We are actively leveraging that package, and our continuous focus on improving efficiency has continued. We are almost live in 30 offices with our new loan origination platform, which has already started producing results by which we are improving efficiency of our sales staff. So with same number of staffs, we are doing more businesses. So our asset growth is very strong, aligned with our strategy. So that's all from my side. Selim bhai, over to you.
Thanks very much, Tomal. Overall, a pretty strong showing from our SME team. We'll move on to retail banking. Our retail banking head, Mahiul Islam, is currently on annual holidays, and we've asked for Sarah Anam, who looks after the deposit products, to fill in for Mahi. Sarah?
Thank you, Selim bhai. Assalamu alaikum and good evening to everyone. This has been a strong year for retail banking. Our customer number is now more than 1 million, which is 15% more than Q3 2021. Around 128,000 of new customers have been onboarded during this time. Our retail deposit has grown around 16% and stands at the portfolio of 18,000 crore. We are focusing on segmental offers along with bundle proposition to book more deposit accounts, along with ensuring supreme customer experience. Our NPL and PAR is presenting a very assuring scenario. Our asset growth is 24% during this time. Dishari, our personal loan, reached to more than 3,000 teachers of around 1,500 educational institutions. All our credit card business numbers are experiencing steady growth. During this time, our mobile app Astha has become #1 digital banking app in Bangladesh. In Astha app, year-on-year transaction volume growth is almost 2 times faster than the overall digital banking industry growth. Currently, we are booking almost 40% of our accounts through eKYC, which is the digital platform for account onboarding. We have also launched end-to-end digital loan processing app called Shubidha. With many other initiatives running, we expect strong growth in retail banking in coming days as well. And that is all from retail banking side for now. Thank you, Selim bhai. Over to you.
Thanks, Sarah. A very, very strong showing, as you can see from the retail banking team, and also embellished by a significant uptick in our digital banking initiatives as well. But we'll hear more about digital banking later. Let's move to corporate banking, and Tariq Rifatullah Khan, Deputy Managing Director and Head of Corporate Banking, will give us a quick update.
Thank you, Selim. Dear valued audience, Assalamu alaikum and good evening. During 2022, Corporate Banking Division achieved outstanding results in all major parameters. This happened due to our continuous effort in the last 3-4 years on developing the right kind of corporate banking platform, equipped with right products and processes, and also we have built a wide area digital banking capabilities to cater our corporate banking businesses. Let's start with deposit. This year, if we see the year-on-year deposit growth, which is around 89%, it didn't actually surprise us because we have considerably expanded our footprint or foothold in newer avenues, including both local and multinational segments. We also added various convenience to support straight-through transaction processing, engage our large distribution network in customer acquisition, and also design our product offering in view of market dynamics. We have strategically and concisely grew more on term deposit, which actually moved our CASA mix and increased cost of deposit slightly. Considering ongoing macroeconomic scenario, we shall continue our focus on growing deposit to support our overall bank's liquidity support. In terms of loans and advance side, we have continued onboarding industry-leading accounts for last 3 to 4 years, which has expanded our approved limit base and with higher limit utilization support. And as we are utilizing our higher limit support, our utilizations, so year-on-year loan growth actually was about 62%. A portion of this huge growth was actually propelled from the current foreign exchange volatility. However, major growth, that is around 40%, is achieved in diversified industries, while we remain as clients' most preferred partner bank. So under ongoing macroeconomic scenario, we shall be aligned with industry growth momentum and continue support to our clients in coming days. In terms of trades, we have achieved massive growth due to our growing footprint in major export and import accounts. We could able to achieve this growth. This happened also due to our years on investment on developing trade capabilities, onboarding industry-leading accounts, and extending dedicated client support also. This growth could have been higher if current foreign currency liquidity situation remains supportive. However, considering ongoing foreign currency situation, we shall continue our cautious approach and prioritize support to export and also import of essential product items as well. So overall, PAR and NPL situation was very good, I would say. Industry faced rising NPL scenario after the post-forbearance period, but however, we remain proactive and cautious in portfolio management as well. So both our PAR and NPL ratio improved in this time period. So that's all from Corporate Banking Division. Over to you, Selim bhai.
Thanks very much, Tariq. Let's now listen again to Shaheen Iqbal, Deputy Managing Director and Head of Treasury and FI. Shaheen will give us an update on the Treasury function.
Thank you, Selim again. I think we have mentioned this in our previous earning disclosure session. Like, we took early position at the beginning of this year by projecting liquidity and market movement, and we were really successful. Like, if you see our liquidity, all the liquidity ratios are pretty healthy, and we took position at the right time and ahead of the market. That's what is benefiting us. Like, when many banks or many competition is struggling with liquidity, we are heavily on the right side. We can cater the right client, and we can also make money for the bank as well. So to be on the right side is one of the bigger challenges that Treasury has, and we rightly did it successfully. On the trading side, like, we maintain both liquidity in local currency and foreign currency. And again, we have been on the positive side to support clients' requirement at the same time to support market as well. On various achievements, like, we did our first affordable housing bond this year and arranged syndicated term financing facility from overseas market for the bank for the first time. And and also with all this performance, BRACBANK continued to achieve equivalent sovereign rating equivalent to sovereign BA3 from Moody's as well. So overall, I think overall treasury and balance sheet management was pretty successful, and we're in the right direction. Thank you.
Shaheen, can you give us a quick reflection of our loans to deposit ratio as well?
Yeah, I think if you can see the graph, like we have been pretty stable in terms of liquidity or the asset advance deposit ratio. In fact, if I may update you with the recent number, the liquidity situation has further improved. So we expect to see good liquidity position for the bank going forward as well, considering the market stress scenario. Thank you, Salim.
Actually, I checked the AD ratio yesterday. It was about 80%. So I thought I'd just put that in. Thanks very much, Shaheen. We'll move to our risk management update from our head of credit risk management, Ahmed Rashid Joy. Joy?
Yeah, thank you, Salim bhai. Good evening, everyone. Dear viewers, we are presenting the 5-year trend of our NPL. As you can see, that's from 2017 to 2022. In Q3, our NPL ratio slightly increased to 3.9%. Now, despite of all this economic shock, I mean, which started during pandemic, the volatility in the commodity market and the currency market and the geopolitical unrest that's ongoing, and all these that have impacted our macroeconomic situation. And despite of all these, NPL of BRACBANK remains static around 4%, except in 2020, which was the year of pandemic and which was the year of gross forbearance allowed by the regulators. So you can see the NPL numbers are static, the percentage. Similarly, on the bottom side, we are presenting the 30 days past due or overdue ratio. Again, since 2017, our pre-pandemic year PAR, that is that of 2019, was 6.11%, which now stands at 5.9%. Despite all the uncertainties that I have mentioned, which started from early 2020, our both PAR and NPL ratio remains static as we speak. What we plan is to check this PAR level and arrest our NPL volume increasing further. That's our main challenge. Next. As of September 2022, our credit coverage stands at 114%. And during this year, up to Q3, we provided Taka 140 crore as loan loss provisions. This resulted credit cost of 52 bips. If you look at the curves, the amount of LI that this bank provided in 2020, which now looks very prudent, and that kept our coverage ratio still high at, above 100. So like the year 2020 as a bank, we will remain committed to keep adequate loan loss provisions in the coming years if situation demands. Next. Many of you wanted to see that what's our payment restructuring, the portfolio under payment restructuring. Now, if we exclude our NPL, of course, our regular payment terms, the portfolio percentage in regular payment terms stands at 97%. Around 2.8% is under regular rescheduling or COVID restructuring. We were very cautious on granting clients the second COVID restructuring that was allowed in 2022, which is only 0.2%. So as you can see, 97.2% of our portfolio is under regular payment terms. We remain responsive during any recent economic downturn. Recently, in the last quarter, we did a couple of exercises. We analyzed industry segments where our portfolio, concentrations are high, and we have revised strategy accordingly. We have strengthened the processes and devised new strategy on onboarding clients, not from the vulnerable sectors. On SME segment, we are focusing on the less impacted business. There are we do 92 SME business in 92 subsectors. of which 44 subsectors we have identified are going slow. Some are, pretty slow, some are moving slow. So we have tightened the risk parameters while underwriting, the credit. On retail segment, we have again assessed the credit criteria, and we have tightened them. We are now more focusing on the actual disposable income of the borrowers on the retail segments because of this high inflation regime. So that was the update from the risk management. Thank you, Salim Bhai.
Thanks, Joy. That was a comprehensive update, and I hope our viewers have a better understanding of our portfolio. As you can see, the portfolio is pretty well managed, and the accent is now on improving it further as we go forward. We have a new chapter in our presentation, and this is mainly because a number of our shareholders have asked for an update on our sustainable financing. And let me introduce our young colleague, Sharia Rahman. He is Senior Manager of our Sustainable Finance Unit. Sharia, please give us an update on the sustainable finance aspect of BRAC Bank.
Thank you so much, sir, and good evening, everyone. At the end of Q3, our sustainable finance portfolio stands as 4,292 crore, which is one of the largest in the banking industry. Considering the current economic context, we believe that during the end of this year, our portfolio will remain at the same level as well. If we look into our segment-wise sustainable finance portfolio, the bank has been moderately maintaining similar portfolio mix from 2021 to Q3 of this year. For this quarter, 23.21% of our total disbursement falls under sustainable finance category, which is 2.31% higher than Bangladesh Bank's 20% target. We have also attained 4.03% green finance against 5% target set by Bangladesh Bank, which is also at higher end considering the industry average of 2.5%. As one of the top 10 sustainable banks of the country, we are focusing more on utilizing the soft loan windows from Bangladesh Bank and onboard new green clients for both SME and corporate segment. So that's all from my end, sir. Thank you so much. Over to you.
Thank you very much, Shahryar. This is an area of focus for us going forward, and I would request you to watch this space going into 23. Thank you. Let's now hear from our distribution network and alternate banking channels. We have Najmur Rahim, Head of Alternate Banking Channels, and we also have Sheikh Ashfaq, Head of our distribution network.
Thank you, Salim Bhai. Hello, everyone, and good evening. I am Sheikh Mohammad Ashfaq, the Head of Branches of BRAC Bank. As you can observe from the screen that our network comprises of a strong brick and mortar foundation with 187 branches and 8 sub-branches. Branches have made strong deposit growth till third quarter, contributing around 39 billion. We are also observing very good business figures from the newly set up sub-branches, which is an important vertical for us. Going forward, our focus areas will be to roll out the sub-branches to support our deposit growth, more engagement with customers, growing FX business through extensive marketing with the foreign remittance dealing community. From the capacity enhancement perspective, we are putting extra efforts to train our staff with digital operating setups. That's all from my part. Now Nazmur Bhai will take you through our alternative banking initiatives. Thank you.
Thank you, Ashfaq. Good evening. As the customers' engagement into the alternate banking channels increases, we have been investing our time and efforts to improve the offers, as well as we started offering the account opening through eKYC, straight through processing. We have also started installing cash recycling machines so that the customers can withdraw and deposit cash using a single machine. In mobile app Astha, as Sarah told you earlier, we have crossed the monthly fund transfer volume of 3,000 crore taka using NPSB, EFT, and RTGS channels. Moreover, services like fund transfer between the bank account and UPay wallets positive pay instruction, and most importantly, retrieving bank certificates for income tax return purpose are now being catered through our mobile app, Astha. These services are not only providing convenience to our customers, but also reducing the dependency of branch and call center to low-cost internet banking channel. These banking channels are not only cheaper and faster, but also provide better customer experience with robust control of the transactions. By offering these new quality services to the customers, our division has been contributing a lot to be the most happening bank in the country. Thank you. Thank you very much.
Thanks, Najmur. Thank you, Ashfaq. Ladies and gentlemen, let me just remind you that the BRACBANK distribution strategy is a mix of the physical and the digital infrastructure. So you have a large physical network, which is continually being expanded through agent banking and through the sub-branch network. But it is very well complemented by a suite of digital products as well. The banking app, the corporate banking payment solutions, the call centers, etc., as well. Let's move now to our Deputy Managing Director and Chief Operating Officer, Shabbir Hussain. Shabbir will update us on our digital transformation initiatives.
Thank you, Salim Bhai. Assalamu alaikum and good evening, everybody. We had yet another successful quarter from digital transformation point of view, where we continue to focus on our 4 key objectives. And as you know, these were enhancing customer experience, grow revenue, reduce cost, and compliance. In quarter 3, we had many features, new features in Astha we could roll out. And my previous colleagues, they mentioned a few. I'm not going to detail in the case. Now, as you know, Astha is the #1 app in town at this point in time, and that's by the declaration of the central bank. They publish such numbers in their site. Now, we have also launched digital lending app Shubidha in the last quarter. And automation in data analytics is enabling our businesses to make data-driven decisions. Account opening through eKYC is growing. As we speak, it stands about 25% of total account opening volume we do through eKYC. DMS was another initiative we were doing from before. Now that 50% of our branches are under DMS, essentially means all our documents are flowing through digital channels. Now, in quarter 4, significant items are integration with the Binimoy interoperability platform that central bank is arranging, where BRACBANK is one of the few pilot banks. We also have a number of initiatives in the remittance space where we'll be enhancing those applications and we'll be connecting to more and more partners to ensure efficient remittance flow. And finally, customer acquisition and digital loan disbursement for SME segment is also in our queue for quarter 4. That's all from my side, Salim Bhai. Thank you very much.
Thanks, Shabbir. All in all, as you can see, significant improvement in our digital banking services range. And we're really pleased to see the traction that this large project, which actually includes many different sub-projects, is moving. It's been very, very productive, and we are very excited. Thanks very much, Shabbir. We'll take you through the financials, and I'll show you some graphs about the balance sheet, and then we'll hand over to our Chief Financial Officer and Deputy Managing Director, Masood Rana. So let's start off with a quick glance at our customer assets. So you have SME in green, retail in blue, and corporate in golden. Together, a pretty strong asset growth of 37% over the last 1 year. So very, very positive and contributed strongly by both retail and SME, and also corporate, as Tarek mentioned earlier. Importantly, growth in all segments is very well aligned to strategy and our risk management appetite. Next slide, please. So you can see the components. If you look at the loan 43% SME, 37% corporate, and 20% retail. If we compare to last year, you'll see that the corporate has grown more. It's not that SME is smaller than last year. It's just that the percentage contribution of SME is a little less, and that's mainly because the corporate book has jumped from 9 to 4, almost 14.67 thousand crores. Again, I emphasize that it is very much within our risk appetite strategy and our business growth strategy. Next slide, please. Deposits, 31% growth for the enterprise, very, very strong. Only challenge being that if you see the next slide, the only real challenge here is that, sorry, it's not this slide, but the next one. Yes, you can see that our CASA numbers have slowed down. That is pretty much across the industry, true for the entire industry. And also the fact of the matter is that the higher rates available on term deposits now make it much more attractive for customers to move funds away from their current and savings accounts into the term deposit, 3 months, 6 months, 9 months, 1 year, 2 year term deposits. If we look at the previous slide, that will give you a sense of how each business segment contributes to the total deposit pie. So 51% from retail, 32% from corporate, and 17% from retail. That is pretty similar to last year, except for the fact that the corporate book, as Tarek mentioned earlier, has grown quite significantly from 22% or 5.8 thousand crores to almost double to 11,000 crores. Next slide. And here you can see how our spread has come down to 4.1%, which is pretty much what the central bank wants it to be around. And the expectation also is going forward that this is the level our spreads will remain at. If you might be wondering why the yield is not at the highest level, that is because this blue line also incorporates a lot of refinance and subsidized lending as well. Importantly, you'll notice that the cost of fund has started to grow from the levels it was at about a year or so ago. And that again is a function of the fact that interest rates in the market have risen quite dramatically. Next slide. A lot of achievements. I won't bother you too much with these, but one is very, very important. I think the fact that our transaction banking business is now growing very well and is generating a lot of deposits into the corporate banking sphere. And at the same time, you will notice that there is a South Asian Business Excellence Award for our digital banking services as well. Next slide. I will hand over to Masood Rana, our CFO now. Masood.
Thank you, Selim bhai. Good evening and assalamu alaikum, everybody. So let's start with our standalone bank performance. So as we have heard our colleagues, our total revenue, if I may start with this, has grown from the year-on-year 8%. So I'll detail a bit. So on the other hand, if we look at our loan portfolio, it has grown about year-on-year 37%, which is approximately 108 billion taka from last September. And since December, it has grown by about an annualized rate of 31%. To support it, our deposit has also grown. Our deposit has grown by about 84 billion since last September, and annualized from the last December is about 20%. A significant growth, which we actually aim for and plan for. And thanks to all our colleagues that we could support and actually grow sensibly during this 3 quarters. So overall, our balance sheet size has increased from the last December about 17%. As we speak, it is the size of the balance sheet is now 52,000 crore, more than 52,000 crore. So as I say, if we look at, I'll explain the other financial metrics. Let's look the our profit and loss account, the standalone piece. So overall, our operating income has grown by 8%. If you want to deep dive it, in the next slide. So here, let us start with our net interest income. As you can see, we have grown our balance sheet, and our income has accordingly grown about 27%. But as you can heard from our treasurer, our CEO, that yes, there has been challenges. We could see generally see the price has gone up, particularly on the funding cost. So yes, the funding cost or the cost of deposit has grown significantly, almost 2.5 times of the increase in the interest income. So therefore, overall net interest income has grown by about 9%. I think still, given that situation and with the environment, we're quite happy with that growth. I think most importantly that where we actually done quite well is our non-funded income. It has grown overall by about 40%. Commission, brokerage and exchange, we witnessed about 82% growth. Other operating income has grown by about 65%. But coming back to the investment income, I must tell you that last year when our portfolio was quite large, about 8,000 crore. Now this year we have managed about a 5,000 crore on an average. So therefore the volume impact is there, and also we all know the rate has been an issue. However, given the interest scenario, these things have picking up, and we are already mobilizing a few of our resources to there. So hopefully go down the line we would see uptick from the investment income. Overall, in the waterfall we can see that yes, asset volume that we have driven has actually worked out well. If we can go back to the dashboard again at standalone, P&L. Let me go through the P&L and I'll come back. So our income has grown by 8%. The overall cost has grown by about 22%. About 2 billion taka has gone up since last September. Of this 2 billion, about 82% is people cost. We have been investing on our people. We are, investing on our infrastructure. So on top of it, yes, there are some, regulatory direction as well. However, we look at this as a positive in terms of as we want to grow bigger and larger. So we believe this will actually help us in the long term. However, because of this large increase in the cost, yes, the overall profit before provision, you could see a year-on-year dip. However, if we look at the profit before tax, it has grown by about 3%. As I mentioned, the investment income, we had some chunky income, kind of capital gains from our investment income, which used to be taxed at a 0 rate. However, this year, the Finance Act has bring in tax on that piece, and therefore you could see that our effective tax rate has also gone up. Having said that, overall, our profit, let's go back to the dashboard. Our profit after tax as a standalone basis is 7% lower than last year. But I think overall, the kind of strategy that we had and what we are executing now, I think we are quite satisfied with the overall growth of our driving engine. And while the profit is a bit subdued, I think if we take a holistic view, I think we are quite happy with what we have achieved in these 3 quarters. As I said and explained, as a result of this subdued profitability, the ROE has impacted. However, if I dissect in quarter by quarter, we could see some growth in the ROE in particularly Q3, and I hope to see this growth continue in the coming quarters. As a result, similarly, ROA has also, bit impacted. EPS, because of the profitability exactly for the 7% year-on-year, that has been reflected in our EPS. As I said, cost to income ratio is predominantly, driven by the cost of deposit. But if I exclude that cost of deposit, only OPEX versus revenue, it remained more or less same. In fact, 44% last year. As we speak, it is also 44%. Our capital adequacy also gone down because we have significantly grown our balance sheet. As I said, it has grown by about 17% from the year end last year, December. So therefore, some degrowth in the capital adequacy. Spread, Salim has already mentioned, we are still, regulatory direction to maintain spread at around 4%. So we have been managing this. I think if we look at the consolidated performance, while we have few of our subsidiaries, bKash and 2 capital market subsidiaries, and also exchange house. So I think the share of that before detailing on it, I think that would give you a better picture. If you go to the subsidiaries share slide. Next slide, yes. Here, I mean, Q3 last year and Q3 this year, year to date, if you look at overall as a consolidated profit and loss has grown. And thanks to bKash, it has moved to a positive number, which actually is significantly helping the overall consolidated profitability. Yes, our capital market, both capital market subsidiaries have been doing well given the environment. As we all know, our Sajan is also coming out of it, the challenges that it had. So overall, if we go back to the dashboard again on the consolidated performance, balance sheet revenue has grown by about 15%, where standalone it was 8%. The rest is coming from basically from the bKash. bKash has grown about by 23%. We will hear from our CFO of bKash later on. The loans is more or less similar. Deposit is kind of replicate of reflection of what bank has done, but the overall balance sheet size has grown by about 16%, including all our subsidiaries. And interestingly, as I said, bKash has produced positive numbers, which actually made our profit after tax year on year 12% higher than last year. ROE, ROA, these are mostly, as I explained, in standalone performance. And the cost to income ratio used to be 67% at a group level, which has slightly increased to 70% due to the cost impact on the bank side. However, as a group, our capital adequacy has been pretty strong. It is about 19%. I think we can hear from Moin Bhai now. Moin Bhai, over to you. Moin Bhai, are you there?
Thank you, Masud Bhai. And good evening, viewers. I'll walk you through the performance of bKash for the first 9 months of the year. So 6 quick indices, which will give you an idea of the performance for the first 9 months of the year. So 63.8 million customers on the platform. And so this was as compared to the same time last year, we added 8 million customers more on a 12-month basis, which translates to about 29,000 customers being added to the platform every day. Moving to the right side, 36.4 million active customers. This again translates to about a 57% active ratio. Compared to December of last year, we added 3.6 million more active clients to the platform. 66% market share. We've maintained this. 12 months ago, this number was also 60%. So despite competition and a growing market, we've maintained 66% market share. 283.7 thousand merchants. This was a number of merchants that were on the bKash platform, i.e., meaning these merchants were accepting bKash as a payment provider. The same number in December was around 275,000. So we added 8 more thousand in the past 9 months. And of the 283,000 merchants, about 175 of them are active. 571.1 billion, that is the average monthly transaction volumes over the platform. This has grown 20% over last year. 312.3 thousand, that's the number of agents. This is one of the most important assets of the company, and they act like almost mini human ATMs, where basic cash in, cash out, and registration of customer takes place. And this number has been almost it's plateaued down to that number, 315,000 agents across the bKash network. Moving on to the P&L. So as Masud Bhai put it, we did have a 23% growth in Q3 over Q3 last year. Now this growth has primarily come in again from cash out. However, where I would like to bring to your attention is we've had 3 big elements to this growth, which is non-cash out. One is transfers from bKash to bank, and that is a much more profitable product as opposed to a cash out. We've had our increase in person-to-person transactions, and we've also increased our revenues from customer float. So those 3 combined together, if you notice, the gross margin profit, the gross profit as a percentage of net revenue, that for the first 9 months of 2022 is 26.8%. If you compare that with the 2021 numbers, it's gone up from 23.5. So the point I'm trying to make is, profit margin wise, we have increased because we are now selling, or we are now doing more profitable products. So that's why our net revenues have gone up by 23%. However, our gross profit has gone up by 40%. And that is the primary driver of we coming to profitability. On the expenses side, our operating administrative expenses went up by 107 crores. And there are basically 3 big drivers for this increase. One is people cost. The other one is depreciation. And the third one is license cost, software license cost. So that, which makes our operating loss was 61 as opposed to 110 last year. So we improved by 45%. Net finance income 88 crores compared to 6 crores over last year. This is at the backdrop of the SoftBank investment coming in. So this is the driver. The driver of the investment is that increase of net finance income. And there is a WPPF element. And so bottom line, profit before tax was 26 crores as opposed to a loss of 105 crores. And translating that to after tax, we made a marginal profit of 4, but a significant improvement from 101 crore loss last year. So that was in a nutshell a summary of the financials at bKash.
Thank you, Moin bhai.
Thank you, Moin. Thanks. Ladies and gentlemen, before we move into the Q&A, I'd like to sort of sum up everything that you've heard over the last 48 minutes. So essentially, a strong balance sheet growth in BRACBank, importantly, significantly outpacing industry, both the growth in deposits and loans is well above what the industry has experienced over the last 1 year. The balance sheet growth is also driven by increase in customer numbers. There is a continued investment in people, in technology, in the branch network, sub-branches, agent banking, etc., etc. Our digital transformation is continuing full swing. Very importantly, real benefits are now coming through. You heard about eKYC, you heard about the continuous improvement in our corporate solutions, payment solutions, in the retail banking app, Astha. These are now becoming mainstream across the banking industry. Importantly also, our portfolio is being well managed. There are no reasons to fear any real surprise as such. Our growth till date over the last 1 year has been strictly aligned to our overall strategy and our risk management strategy. Challenges, costs of deposit have gone up. Yields are suppressed necessarily because of the regulatory restrictions, the 9% cap. And of course, earlier this year in Q1, people costs jumped up quite significantly, mainly because of the central bank's insistence that we provide better compensation to the junior most job grades. And that, as our CFO also mentioned, has impacted us negatively in terms of the P&L. bKash performance, you heard about it from their CFO. This has positively impacted overall BRACBANK group profitability. So that's about basically the key messages that we wanted to send you. And we will now move into the Q&A section. Dave, could we start with the questions, please?
Sure, sir. Thank you. Should we start with the bKash question first, sir?
Sure. Let's finish off bKash and let Moin leave.
Thank you, sir.
Sure.
So third quarter was very good for bKash. Thank you, Moin bhai. So we have this couple of questions for bKash. So I'm just starting. So bKash reported profit in third quarter after 13 quarters. So can we assume that bKash will continue to make profit from the next quarter as well?
It's a tricky question. So please bear in mind that bKash did make a profit of 46 crores in the standalone third quarter of 2022. However, if you look at the revenues, that there was a marginal decline in revenues for bKash. So, and really why we made a profit in Q3 was a couple of reasons why. There was the second Eid was on the first week of July. So what we did was there was a lot of cashback incentives, cash out subsidies for the garments workers that we had incurred in Q2, and the revenues actually came in Q3. So a cost of that was booked in Q3, and the revenues came in the cost was booked in Q2 and the revenues came in Q3. Sorry about that. In Q3, our advertising, our marketing promotion costs were significantly lower than Q2. And the other factor that you must consider is in Q3, our effective interest rates went up because we had booked about 65% of our total customer deposits was booked in government securities, which gave a higher yield. So that portion, government securities interest will continue through the year. But going forward, bKash will make significant investments in ecosystems like merchant payments. So overall, investments will continue. And it's not necessary that the Q3 results is an indication of what is coming in the coming years.
Thank you, Moin bhai. Recently, Bangladesh Bank take an initiative on mobile money interoperability. That's the MFS company. So what is the impact for the bKash on this case?
Well, the interoperable Binimoy was launched on last Sunday, the 13th, and there are 15 institutions, 11 banks and for 3 MFS and 1 PSP. That's in the network right now. It's really very early days to see what will happen. So far, we've seen the first week of Binima, we've seen there's an outflow. There's more of an outflow happening from bKash, but then, as I said, these are very early days, and we'll have to watch this space in the coming months.
Thank you. The next question was about the bKash market share. What is the bKash market share? What is the active customer number, ARPU, and plan for going forward?
Okay, so I'll answer that one by one. So the market share, as I mentioned in my first slide, we've maintained we have a market share of 66%, and we've been maintaining that for the past couple of months. Despite competition, we've maintained our market share. The other one was ARPU. Our ARPU right now, average ARPU stands at about 132 takas. We've added about 8 takas to that over the past 12 months. The other one was app users. So our total app users as at September was about 11 million. And the same time last year, we were about 8.5 million customers. So we have added to our app users. And what was the other one, Dave?
Last question was that what is the plan for growth going forward?
So the plan for going forward is the area where bKash will be focusing is merchant payments. Our cash out business has been a dominant revenue driver, but we will have to increase our presence and also digitize the payment systems in the country. So going forward, payments will be an area of focus.
Okay, the next question was that the gross profit margin of bKash improved to 30% in third quarter from 24.5% year ago. So what are the main drivers behind the improvement in gross profit margin? Can we expect this improvement to continue in the coming quarters? And what will be the target or optimal gross profit margin ratio for bKash, and when the company is expected to achieve that?
Okay, our organic gross margin is about 23 to 24%, but third quarter was a 30% gross margin for a couple of reasons, as I mentioned. One of them was you see, our biggest cost component is the commission that we pay to our agents, and the agent commission is dependent on 2 factors. One is the fixed commission that they get based on transactions, and the other one is based on a variable pay. So there are targets that are set for the agents, and if you achieve those targets, commissions are paid. So in the third quarter, the variable component part of the agent commission was below normal. So as a result, our gross profit increased to 30%. But going forward, that 30% may not be sustainable in the coming months. So to answer your question, organic gross profit is in the range of 25%.
Thank you. The last question about bKash is that the OPEX has dipped on quarter-on-quarter basis in third quarter. Have you started to rationalize cost base? Can you give us a sense of the key investment or in spending plan with SoftBank's funding going forward?
Okay, so there are a couple of reasons why the cost went down. The number one cost that went down quarter on quarter is people cost. So we've had a few attritions at bKash, and that resulted in the quarter on quarter cost going down. But those attritions will obviously in the coming months, that will I mean those are gaps. So we will take in people there. So that is not a sustainable cost reduction going into the future. So and some costs we have made efficient. For example, the agent commission is, we will not go back to the earlier agent commission because we have rationalized the way we pay our agents. So there will be some savings, but quarter 3 solo should not be taken as an indication going to the future.
Thank you, Moin bhai. That's all for the bKash. So, sir, I'm starting with the BRACBANK related questions.
Please go ahead. Thank you, Moin.
Yeah, so I'll leave.
The first question is that BRACBANK has been maintaining the double-digit loan growth for last 4 quarters. Eyeing the slowdown in the economy, can we expect that the loan growth to come down?
Well, the expectation for next year is not very positive on a global scale. As far as BRACBANK is concerned, we have over the last month or so tightened our risk appetite in all 3 client segments, particularly in SME and retail. However, I think our loan growth, while it may be slightly muted from current levels, will still be significantly higher than industry. That is an aspiration. I don't see any reason why that should change. And if it does, we will let you know as we progress through the new year.
Thank you, sir. Supporting the last question, to continue this current loan growth, can we expect BRACBANK will have to go for aggressive deposit booking?
Yes, the deposit mobilization drive is something that we do not intend to put a brake on. It is important that we grow funding capabilities, particularly now as overall liquidity is slightly squeezed. This gives us an opportunity to build relationships with new clients, and today's deposit relationship can flower into different kinds of revenue generating asset-backed products over the next 6 months or 1 year's time. So it's important that we continue to grow our deposits. That is an area that we are not going to shift focus at all.
Thank you, sir. We have received few questions on our liquidity. So first question is, what is BRACBANK's view on the current liquidity scenario?
So we'll ask Shaheen Iqbal, our treasurer, to come in here. But overall, I can say that while the banking sector itself has some challenges, much of that emanating from the fact that the central bank has sold a lot of dollars to the industry over the last 1 year. But as far as BRACBANK is concerned, you will have heard that our loan deposit ratio is still around 80% only. So we are quite comfortable. And particularly if you look at all the liquidity ratios that the central bank has imposed on the banking sector, we are very, very compliant. Shaheen Iqbal, would you like to expand on what I just said?
Yeah, thank you, Selim bhai. I agree with your comments. Just to add something on the industry level, like with the kind of inflation that we have, central bank is likely to pursue contractionary policy for some time and also they would like the demand for loans really come down and then make liquidity less available or make costly for overall system. So we do expect to see like tighter liquidity position to continue for 2023. Thank you.
Thank you, Shaheen bhai. Related to liquidity, the next question is how does this liquidity pressure impact the BRACBANK's ability to grow profitably in the future?
Let's put it this way. In the current environment, we actually see a certain amount of what we could call flight to quality happening. And while the growth in deposits, which has been very, very positive and much higher than industry levels, can also be attributed to improved services, many new digital products and services, strong marketing. I think there's a certain element of, as I said, flight to quality there as well. So I personally believe that our growth should not be hampered unless there is any major reduction in liquidity. And we are quite confident in BRACBANK of being able to continue to grow deposits. What will be impacted is, of course, our margins.
And also, I'd like to, add here, Salim Bhai, as we showed you our yield on assets. Yes, it's currently 7.4%, but there are some headroom for us to, grow at that space even. However, yes, of course, if the liquidity condition on the near future is going to be tight and costlier, I think we can, pass on a bit to our asset as well. So therefore, we do have that maneuverability. Thank you.
Thank you, Masood bhai. Next question is that what are the recent developments regarding possible removal of lending rate caps in the Bangladesh given the rising rate environment?
There is a lot of pressure on the central bank to withdraw the lending rate caps. They have already withdrawn the floor on retail term deposits, which had been in place for about a year. While there was no formal circular to that effect, the central bank has advised us that there is no restriction vis-a-vis retail term deposit rates. You might recollect that earlier we were required to maintain a minimum, a floor at equal to 3 months average of the published inflation rates. So that has changed, number one. Number two, the consumer finance lending rate has also been relaxed by 3%. So the cap has, for that business, essentially car loans and personal loans, has moved from 9% to 12%. That too is an indication that while there hasn't been any other change to corporate, commercial, or SME lending rates, that is an indication that the central bank is seriously thinking of allowing some relaxation in those areas as well.
Thank you, sir. As we see, BRACBANK continues to grow its loan book aggressively despite rate caps. Does it give the government any incentive to remove the cap?
No, I think we must remember that BRACBANK is still only about 2.2, 2.3% of the market. So we're very small. And while we may be growing very well, we are an outlier. Industry in general, deposits are growing at about, I think, just under double digits, and assets are growing about 13, 14%. So BRACBANK's growth is certainly not sufficient to significantly influence policymakers.
The next question is how the rising policy in rates impacted BRACBANK.
Well, there is an immediate impact in terms of our net interest margin. You can see that that has come down to 4%, about 4%, which is where we also want to be, and which is where the central bank also wants us to be, around that 4% margin. So the real impact is that our cost of funds have gone up. And as our CFO mentioned, there is still some space, maybe 1%, 1.5% space in terms of the lending rate before we reach the cap of 9%. So the rising rates have really impacted our margins, but there is space should we want to increase lending rates further, particularly in the corporate banking business.
Thank you, sir. If we move to the next question, government has started imposing caps on FX and imports. How would this impact asset quality and profitability of the bank?
It hasn't impacted us that much. A few products and services have to be controlled right now, but we haven't been impacted very much at all. We've managed our FX liquidity, our foreign exchange lines with correspondent banks are all very much in operation, and we're quite confident of being able to do much more business in this sphere. So no real impact as such on BRACBANK.
Thank you, sir. The next question is, what is BRACBANK's view on the FX scenario especially?
I'll ask our treasurer, Shaheen Iqbal, to comment on that question.
Thank you, Salim bhai. I think I mentioned this in my previous session, like we expect to see like, let me briefly go back a little bit, like the way it really started, like after the pandemic, we had a lot of demand pent up, and that's really created a lot of requirement for import. And later on, with the higher price of commodities and the fuel, so our overall liability really increased. That's why our gap of say earning in foreign currency and spending in foreign currency really increased. That was creating pressure. I think from July onward, we have been monitoring, especially the country and the central bank, encouraging banks to really be cautious in terms of opening LCs and really taking foreign currency liability. So gradually, we have seen that import has come down, export and remittance is taking in the same pace. So overall balance has improved. The kind of pressure that we are seeing now, this is for earlier open transaction. So we do expect to see this pressure gradually coming down by Q1, and probably by Q2, the things should gradually normalize. I think that's how we are seeing, like with the current condition and considering the current trend, we do expect to see by Q2 2023, FX situation should normalize significantly from current level.
Thank you, Shaheen Bhai. The next question on the IMF part. So the question is, what is your thoughts on IMF asked for a more dynamic monetary policy? Should expect to see any adjustment in the lending rate cap, and especially whether BRACBANK is actually going to offer the higher interest, like 12% interest for the retail part or not?
We are not clear about what conditionalities, if any, have been agreed between the IMF and the Ministry of Finance. So we'll have to wait for further clarity on that matter. Yes, we can increase our lending rates to 12% in retail because the new cap is at 12%. How we'll go about it is really a question of a business strategy that I really don't want to discuss right now. What I can tell you is that we can move up to a maximum of 12%.
Thank you, sir. Next question is on NPL. Given the expected slowdown in overall business, is there any chance that the NPL, especially in the corporate sector, to increase?
I'd like Tarek Rifatullah to respond to that. Tarek?
The way we have been managing our portfolio and the way we have booked in line with our risk appetite, I don't see any coming, escalation. But however, it depends on the macroeconomic scenario as well. Thank you.
Thank you, Zakat Bhai. The next question on the cost part. We have seen that the CIR seems very high. What are your plans to reduce it?
What I'd like to comment here is that firstly, the increase in costs is both in staff cost and operating costs is driven by a number of matters. Firstly, of course, there was that regulatory requirement for us to increase staff salaries for entry-level officers. That had a big impact on our financials for the year, number one. Number two, overall operating costs have gone up across the board. That's really a function of inflation and the increase in prices of imported commodities. But the fact of the matter is that costs have overall been managed well. Going forward, I can see a lot of benefits coming out of the many different digital transformation initiatives we have. You have already heard how 20% plus of the bank's account opening has already been moved from paper to digital using the eKYC channels. You would have heard our head of SME tell you that the loan originating system for the SME business, which is roughly 50% of our client asset business, that is working out quite well, and that should be fully operational by first quarter next year. So I see improvements in terms of overall workflows, streamlined processes, and I think there will be much more business coming on board, and the incremental operating costs associated with incremental business will start slowing down. We expect to see an improvement in cost-income ratio next year.
Thank you, sir. We have already come to the last question. So one of our investors said that we are seeing that our foreign investors are leaving. Any initiatives taken to retain the foreign investors' base?
Well, firstly, I think the fact that investors are fleeing from emerging and frontier markets is not news. It's not exclusive to Bangladesh. It is happening across the board, and it is mainly because the risk return now from US securities is so much better. So that is something that is difficult for us to compete with. At our end, the best we can do is continue to make BRACBank stronger, our business platform, our model more sustainable, and continue to book new customers and new business and open up, provide access to credit to many different customer segments across the whole Bangladesh geography. And that's what I think we're doing quite successfully.
Thank you, sir. That's all from my side. Thank you.
Ladies and gentlemen, thank you for being with us. It's 9:15 here in Dhaka, Bangladesh. Wherever you are, I wish you well, and look forward to seeing you again at year end. Khuda Hafiz. All the best.